Hi everybody, my name is Priyanka Prakash and I'm a senior staff writer at Fundera. Welcome to our Facebook Live with Ty Kiesel from OnDeck. To kick things off, Ty, would you tell us a little bit about yourself and OnDeck and your connection to small business?
Sure. My connection to small business is I grew up in a small business family. My dad had a small business. I've had a business or two of my own as well. I've been writing in the small business space for the last 8 or 10 years and writing about small business financing specifically for the last 6 or 7 years. So I write about small business. I try to relate it to what it felt like when I was a small business owner. So it's not just the party line, it's what is small business owners, what are they thinking and what are they going through, and how does what we do relate to that?
That's great, thank you. So for those of you who are new to Fundera, Fundera is a resource for small businesses, and we help you make some of the financial decisions for your business and choose financial products for your business. And OnDeck is one of our partners. OnDeck provides different types of loan products for small business owners. And today we're not going to go into the details of those products, but we're going to talk about a closely related topic, business credit. So Ty, as you're aware, a lot of small business owners understand the concept of personal credit and their personal credit scores, but business credit is where things get a little bit more murky. Now I know OnDeck actually can help small business owners improve their business credit, and we can talk a little bit more about that. But to begin with, can you just explain why a small business owner should care about establishing business credit?
Business credit is probably one of the most misunderstood parts of the equation, because a lot of business owners don't even realize they have a business credit score, or a business credit profile, I would say rather. But if you're looking for financing in particular, your business credit profile is really important. And in the same way your personal credit score reflects how you meet your personal obligations, your business credit profile is going to reflect how you meet your business obligations, how you pay your suppliers, how you make your lease payments, if you have any business loans, how you make those payments, etc. So it's really important when it comes time to borrow.
I see. And what is the scoring like? Is it a similar, like with personal credit, for example, the score can go, I think, between 300 and 850. What is the scoring rubric like for business credit scores?
It's completely different than your personal credit score. It's actually more a collection of reports and scores. Some people may have heard of Dun & Bradstreet's Paydex score, which is a scale of 1 to 100. It's only one of the things that they report on. They're going to be looking at how your business compares to other businesses in the region, other businesses in your industry, other businesses with a similar number of employees, and businesses that are in the same income range as you are, the same revenue range as you are. And then what they're going to do is they're going to look at the industry statistics, and they're going to compare your business to how those businesses are doing. So when a creditor looks at or a lender looks at your business credit profile, they're basically seeing how you perform compared to everyone else that looks like you. And they're also going to, Dun & Bradstreet, for instance, gives a report on what your highest credit use to date is, what the average credit use you have is, and they're going to make a recommendation as far as how much credit they're going to give you. And so basically it's a lot of comparison in that regard, as well as anything that you file publicly, like your business license and things like that, that tells the credit bureaus information about yourself, or not yourself, but your business. So they're going to pull that information. That's going to be things like the industry you're in, and your employees, and those kinds of things, and it's going to give them an idea as to how to rate your business. And so that's part of the reason why it's so important for you to be aware of what the business credit bureaus are reporting about you, because like everything else, there's an opportunity for things to be incorrect. And you want to make sure that all of the information in the public record and all of the information that the credit bureaus have on you is accurate.
Got it, okay. So how, as a small business owner, how would I be able to first find out where I stand, like what my current score is?
The good news is that because other creditors and lenders are using this information to make decisions about you, the credit bureaus are really motivated to make sure that the information that they're sharing about your business is accurate.
Mm-hmm.
They don't want to, they don't want to be accused of misrepresenting your business. So all of them have vehicles for you to review your score and make corrections if you need to. The big three are Experian, Dun & Bradstreet, and Equifax.
Okay.
And all of them, if you go to their websites, they have a section where you can review your score. Some of them I think it's free, others of them it might be a small service. And then there are also folks like NAV who offer that service as part of what they do as a business. So
Sure.
it's really easy to kind of find out what the credit bureaus have about you, and it's really important. Personally, I have a personal credit relationship with one of the bureaus that track my personal credit, and I pay a monthly fee for it. I consider it to be really valuable because what they do is if something changes on my report, they give me a notification. If my score goes up or down, I get a notification, and every month I get a report. And if you have a formalized relationship with one of these business credit bureaus, they'll do the same thing for your business. And it's also good as a business owner, if you're a merchant and you offer trade credit to your customers, it's a good way for you to kind of monitor their credit worthiness before you go into one of those kind of relationships with them.
Okay, so you're saying that not only can business check their own credit, but they could potentially use it as a tool to evaluate
Yes.
folks that they might do business with.
And I would totally recommend that. I don't think it hurts you at all to build a formalized relationship. And not only that, I was talking to a friend in the credit reporting business, and I said, how frequently should you be checking your profile? And I was always under the impression, personally, that if you checked your profile every quarter, you were probably okay.
Mm-hmm.
And he said, once a month is not too much. We tend as human beings to be the most engaged in the metrics that we follow the most.
Yeah.
And we impact the metrics that we pay the most attention to. So if you're regularly looking at your credit reports, your credit profile, you're gonna take action to improve or change what's being reported about you. And the beauty is, with business credit, it's basically a comparison of all of the credit notations on your file and a balance of how many are positive and how many are negative.
Okay.
And so the more positive credit notations you get on your file, the quicker it pushes the negative ones down, and the quicker your credit profile is able to increase.
Oh, that's great. Okay, so we're going to get to that actually more in a second, because that sounds really interesting. I think something that viewers would want to know more about. And so just to reiterate, you were saying it's a good idea to check your credit often, and like you were saying, resources like NAV and Fundera offers the same thing, where you can check your business and personal credit scores for free online. Is there any negative impact to your score from checking your business credit score? Because I know that's
No.
a question people have about personal credit as well.
If you check a hard inquiry on your personal credit has the potential to negatively affect a personal credit score, but that's not the case with your business profile.
Okay, good to know. So can you go back to you alluded to this a little bit, some of the things that you might see on your business credit report, such as suppliers that you pay on a regular basis, maybe even the industry that you're in. Could you walk us through some other things that might show up on your report and that could affect your business credit score?
You bet. They're going to look at you at the risk profile of your industry.
Mm-hmm.
For example, this is one reason why it's really important that when you license your business that you make sure that you get put in the right category, because some businesses are bigger credit risks than other businesses. And what they're going to do is they're going to look at the industry risk, they're going to look at others in the industry in your area, and they're going to look at you and can give you a score based upon how you compare to everybody else in your area. They're going to look at the size of your business, the years you have in business, because a 2-year-old business is probably going to have a different risk profile than a 10-year-old business. And they're going to compare your business to other businesses just that are about the same age as you, in the same industry as you, and then they're going to score you based upon how your performance is compared to them. Like I mentioned before, they're going to look at how much credit you've had in the past, how you did with that credit, and they're going to give you a risk score. Dun & Bradstreet's Paydex Index looks at all of those factors and combines it into a score. Experian has the same kind of a thing. They don't call it the Paydex, but they have a 100-point score that they will rate you against as well too. So basically, the things they're looking for is, do you meet your financial obligations to the vendors that you work with? If creditors give you 30 or 60-day terms to pay for merchandise, they're going to see how do you pay those? Are you current? Do you pay timely? They're going to look at any business credit cards you might have. Do you make the regular payment when you're supposed to on those? What kind of balances do you run there? They're going to look at any other small business loans you might have or lines of credit you might have, and they're going to look at how you've done in the past. A lot along the same lines in your personal life. They look at how often do you pay your mortgage on time? Do you make your car payments? Those kinds of things. So they're going to look at all of that kind of stuff, and then they're going to give you a report that talks about the credit use, the risk profile you're in, the industry you're in. Dun & Bradstreet, for example, is going to make a recommendation as to how much credit they would offer if they were the creditor. And when I consider your business credit, I don't look at it as a score. It's not as universal as your FICO score personally. I look at it as your business credit profile, which includes a lot of different scores that are looking at all of these things, so that if you're a business and you're evaluating the credit of someone, if you're a lender and you're evaluating someone's credit, you're going to look at all of these factors, and they're going to fold into how you make the credit decision. So if you meet your financial obligations on time, and you maintain appropriate balances, and you don't overextend yourself, and the credit bureaus can report that you're regularly meeting your obligations, then you're probably going to have a pretty good credit profile.
Okay, so that should be mostly doable for the majority of small businesses. Is there anything that a brand new business should keep in mind about establishing business credit? Like, if I own a startup and it's brand new, am I likely to already have a business credit file?
They're going to start reporting on your performance as soon as you license your business.
Okay.
However, most lenders aren't going to lend to a brand new startup.
Right.
If you go into the bank, they want to see several years in business and $500,000 or $1 million in revenue. Online lenders like OnDeck, it's a little bit different. If you've been in business for a year and you have $100,000 in revenue, there's a potential that we could lend to you.
Okay.
However, if I was a startup, the first thing I would do is start working on my profile. So the next question is, how do I do that? I can't get credit, and I need credit to build a profile. How do I do it? Well, there are a couple of really good, easy ways to do it. Number one is, if you work in a business where you buy supplies or you buy product for resale, most of those vendors and suppliers offer payment terms of 30, 45, 60 days to their best customers. And so I would reach out to my suppliers to see if they offer those terms.
Okay.
If they report your good credit history to the credit bureaus, then you're building a credit profile that's going to show a positive use of credit. Another relatively easy way to establish credit in the first year or two is to look at a business credit card. because business credit cards are a little bit easier to qualify for than a small business loan. If that business credit card, and this is a question I would ask, do you report to the business credit bureaus, or is this a personal card that, that's going to report to the personal credit bureaus? You want a business credit card that's going to report to the business credit bureaus, and that's going to help you build the credit. I think I mentioned earlier, I grew up in a small business family, and so I tend to be pretty conservative about the way I look at business credit. And my dad always believed that if it doesn't increase ROI or add value to your business, you probably shouldn't borrow for it. Mm-hmm. And so, the key is to borrow when you need it, borrow as much as you need, but no more, because there are costs associated with it, and then make each and every periodic payment on time. I was at an Amazon user conference a couple of years ago, and I was on a panel of lenders, and one of the questions was, when should I borrow and how much should I borrow? Mm-hmm. And one of the panelists said, borrow as much as you can, whenever you can, because you never know when you're going to have a chance to borrow again. And I said, that's not the advice I would give. Regardless of where you borrow, whether it's the SBA, a bank, OnDeck, or anywhere else, there are costs associated with borrowing, and if you borrow more than what you need for things that you really shouldn't be borrowing for, it can put your business into jeopardy. So that first year or two of being a small business, I would focus on growing my profile and creatively solving the problems. Unfortunately, in our world today, everybody believes that, I call it the myth of the Shark Tank. Everybody believes that money solves all your problems, and it doesn't.
Okay, so what you're saying is, borrow responsibly as much as you need to grow and capitalize your business, and then the good business credit and will follow with that.
Right. If you're working with vendors who report your credit history, mm-hmm. It shows the credit bureaus and lenders like us that you know how to responsibly use credit, and they're looking for a track record. Basically, lenders want the answer to 3 questions. Can you repay a loan? Do you have the revenues to do it? Number 2, will you repay a loan? Which is a little bit different, right? So they want to know, what's your track record? How have you done in the past? Should I trust you over everybody else that's applying for a loan? And do you have a plan in place that you can make each and every payment should something unexpected happen? And if you can answer those 3 questions for the lender that you're talking to, it'll improve the odds of you getting a loan.
Okay, and so in answering those 3 questions, how much relative importance does a lender like OnDeck give to business credit in a small business owner's loan application versus personal credit or other factors?
Unfortunately for most small business owners, it doesn't matter what lender you go to, your personal credit score is going to impact whether or not you get a loan. Mm-hmm. For example, if you go into a bank, they want to see a credit score of 700 plus. The SBA, the SBA will accept a credit score of 650 or so. Sometimes the bank will go down to 680. Other lenders like OnDeck will take a lower score. Okay. But your personal credit score is going to be part of the equation. Your business credit profile is going to be a part of the equation. OnDeck has lent well over $10 billion in the last few years to 75,000 some odd small businesses. So we look at your business and how it compares to other businesses we've lent to in your industry to make decisions about you. So personal credit score is a factor. Your business credit profile is a factor. How you compare to other businesses we've worked with before is a factor. But ultimately, lenders like us are looking for healthy businesses that have the ability to make repayment. And if we can see that you can answer, can you repay a loan and will you repay a loan, it definitely improves the odds.
Okay. So you were mentioning before that different business credit bureaus like Dun & Bradstreet or Experian, they follow different scoring mechanisms or scoring rubrics. So regardless of which bureau, if I spot an error that's affecting my score, what is the best way to dispute that? Is there like a formal dispute process the way there is with personal credit?
Yes, there is a dispute process. Sometimes it takes a long time.
Okay.
It's a slow process. You're going to need to be able to verify whatever you claim is inaccurate.
Mm-hmm.
So if it's not going to be a matter of this is wrong and they're going to accept that. You're going to need to show them how it's wrong and give them evidence. But like I said, fortunately they want this report to be accurate. They want the information they have on you to be correct. So they're motivated to make sure that what they report on you is right.
Okay. Well, thanks so much, Ty. Any last words of advice to our viewers on business credit when they're looking to apply for financing or work with a new supplier?
In a nutshell, the secret is to meet your obligations, meet them on time. Don't use more credit than what you really need. Make sure that you have a strong and healthy business and that you're paying attention to your cash flow numbers, that you're paying attention to your revenue, and make sure that you understand the total cost of what the financing is going to be. It's really easy to look at APR as the sole metric. Mm-hmm. What's the APR? Well, that's good if you're comparing loans of similar terms and similar types, but regardless of whether they disclose this to you naturally, I would want to make sure I understood what the total cost of financing is going to be. What do those interest payments add up to? Particularly if I'm looking at purchasing inventory, for example, that I'm going to resell, I need to make sure that borrowing money to buy that inventory is going to allow me to make a profit. Mm-hmm. So I would want to know the APR, what the total cost of interest is going to be. I would want to know what all the fees were. I would want to know if there is going to be any prepayment penalty if I decide to pay the loan off early. Some lenders are going to want you to at least pay the interest. Others are going to charge a fee. Some lenders might not charge anything, but you need to know that answer. And today, with the introduction of daily, weekly, and monthly payment schedules, how much is that obligation every month? Is regardless of whether the payments are made every day or once a month, what is that amount so that you can see what kind of impact it's going to have on your cash flow?
Okay, that's great advice, and I think by now our viewers will understand business credit better and how it connects to your ability to access financing and your cash flow and so many other things about owning a small business. If any of you have questions about anything that we've talked about today, just leave a comment on the video and we'll be happy to answer it. Thank you for joining us and have a great day.